All right, guys, welcome to this fun Friday training. We'll eventually come up with a better name for it, but welcome and thank you for tuning in. This is going to be awesome. We're going to go over the most important rules that you need to survive in this market. So, guys, if you're curious what type of rules you need to follow, the systems that you should be setting up for yourself to help protect yourself and help grow your account, this is going to be a great video for you. All right, guys, we're going to start off by going through the lesson plan. We're going to go through about 10 to 15 minutes of some great stuff. Trust me, you're going to love it. And then we're going to go to some Q&A session time. So if you can hear me, please put in the live Q&A channel, "Hey, Austin, I can hear you," and we'll get started here. I do know there's a delay, so I'm just going to keep talking here and kind of move on and assume that you guys are here and that everything works fine, unless you guys tell me otherwise. So I'm going to start jumping into it. All right, so we have the Fun Friday training. We do these live trainings every single Friday at 3 p.m. Central Standard Time. They're basically things to help you stay ahead of the market, to help you learn what stocks you should be looking for, where you should be buying, and setting up rules and systems around your trading so that you can profit and stop being worried and stressing. All right, guys, trust me, I wish I had these trainings when I started, because when I got started, there was literally nothing on the internet. So welcome here. I hope that I can do the best to help you, do some training sessions, and then we'll go into more of the live Q&A session. All right, guys, so we're just going to jump on. I'm going to assume that you guys can hear me fine, and let's go with it. All right, so in this video, we're going over the 3 rules. These 3 rules will absolutely change the way you're trading. I'm so pronouncing this, guys. Ugh. Let me just read the text, right? These 3 rules will absolutely change your trading, increase your profits without it being complex or time intensive. So that's the goal of this training, and if we do that, it will be a success, and I think we will. All right, so what we will be covering: 1, good trading is not rocket science. All right, oops. Number 2, the golden rules of investing your own money. Number 3, crucial statistics behind trend following that will change how you view the markets. And number 4, answering questions live. All right, guys, so the first 3 should take about 10 to 15 minutes total, and then we'll go into some live Q&A. If there are people here for the live, it's going to be awesome. If not, we'll just end it short. All right, so we are able to make all these videos, have all these stats, have all these awareness on what's going on with the market because of the Impeccable Stock software. So they are our sponsor for this. And if you don't know what they are, the Impeccable Stock software is one of the fastest and most reliable ways to do research and find amazing sweet trades and investments. If you want to get started, the first link below will get you started on your 14-day free trial of the Impeccable Stock software. If you're a swing trader, if you're an investor, if you're anyone who wants to stop struggling and wants to easily find stocks and know where to buy those stocks and why, then definitely check out that free trial below. All right, guys, so most of these lessons we are discussing comes from a book called Trend Following Mindset by Michael W. Covell. So, guys, he is a great person to research on the trend following, and aka like knowing when a stock is going to go up and down. And he definitely set the frameworks for a lot of what's going on, and he followed the turtle traders and all that great stuff. Anyways, I ordered his book the other week. I had the chance to go through it, and I learned some amazing things that I want to share. So most of these trainings are from Trend Following Mindset book. So if you want to check out that book, definitely make sure to Amazon it or wherever you can find that book. It's going to be a great one to learn from. All right, guys, so lesson number 1, where we're starting, is good trading is not rocket science. All right, good trading practice number 1. Stop thinking you are smart. All right, guys, we're going to go through a bunch of these. And if you're taking notes, take notes on this because, trust me, it's important. I learned a lot from this, so I know you will too. 1, the good trading practice number 1, stop thinking you are smart. Smart people have egos that prevent them from using stop losses, averaging down on losers, and over-optimizing strategies using historical data and searching for perfection. Okay, what does this mean? When you're smart, you typically think you know everything. And when you invest in something, you think you are right. And when you think you are right, what's going to happen is you're going to stop yourself from losing or using a stop loss because you think you're right and you're not going to lose. Also, when you think you're right all the time, you're going to start averaging down on losers, meaning that you're going to add money as the stock starts to drop, which means you're going to lose more and more money because you think you're right. Guys, stop thinking you're smart. Stop thinking you're right. The market doesn't care who's right or wrong. I don't care which way the market goes. It's just my job to trade the best I can and make money. And that's what you should be doing too. Don't bring your opinion. Don't bring your bias. Don't bring your I think it's going to do this mentality to the market. Just trade what you see and do the best you can following a system you have set up in place. So when you think you're smart, when you have an ego, when you're prideful, when you think you're never wrong, those are the people the stock market eats for breakfast. So make sure you're not one of those people and you're always improving and learning. Also, the second part to this, or the counterpart, is they over-optimize strategies using historical data searching for perfection. What does this mean? People who think they're right are looking for something certain. And if you're looking for something certain in the market, you're not going to be right. And this is an idea that I've had with a lot of the top investing funds. So I actually mentioned this on my Instagram recently. The investment funds of some of the top colleges around the United States, Princeton, Harvard, what did I look at? Stanford, all these places, they make less on a yearly basis than the S&P 500's average return. So they actually are doing worse. And we think they're the smartest around. And my guess is because they are looking for a perfect model, and it's never going to happen. You can't find perfection in the market. You can just find something that works, use it, and trade it. All right, good trading practice number 2, create and understand the strategy you intend to use in your trading. Knowing what went into your strategy and why you expect some losses will give you the stomach and confidence to stick the course even during down periods. What does this mean? You need to develop your own strategy. Or if you're going to use another strategy, you need to understand it fully. Because if you don't understand the strategy that you're using fully, then you're going to guess. When the stock goes down, when it goes against you, you're not going to know why you should be holding. You're not going to know behind it why. And if you don't know the why behind the strategy, if you don't know why it works, when it performs well, when it doesn't, then you're putting yourself at a disadvantage because you're not going to be able to handle those down periods well. You're not going to be able to trust the system. And if you can't trust the system you're using, it's going to lead to massive losses because you're going to jump from system to system to system to system, and you're just going to lose. You have to make sure you stick to a system that works and understand why it works. All right, good trading practice number 3, match your strategy to your personality, ability, skills, time commitment, and capital you have. Take stock of your talents and skills and make sure you are fully utilizing them. This may also mean that you shouldn't be a trader. Let me explain this. Everybody is different. Some people are way okay with risk. These are the gamblers and the casino. And there's people who aren't okay with risk. These people save money and they don't do anything with it because they're afraid they're going to lose it. So we have people on every end of the spectrum. We have people who are good with numbers. We have people who are good with reading. We have people who are good with interpreting. We have people who are super literal. So everybody exists in the world and they're all needed, but you need to understand who you are as a person, how you handle risk, how you research, how you learn best, and use that into your strategy. Let me explain. If you are someone who is not good at math, who's not good at data science, who's not good at anything like that, why should you be using a quant-based model? You should not be using a math-based investing model. If you are great at reading, if you're great at interpreting, if you are great at psychology, what should you be doing? Reading financial statements, researching the company around a whole, and looking at the officers and management, understanding who they are as a person, and do you think that they can guide that company to a better future? And so understand that you should build a strategy based around who you are. So again, you need to take stock of your skills and of your talents and make sure you are utilizing them. Again, this may mean that you should not be a trader, right? It may mean that you can't handle the risk. You don't have enough time. You don't have enough money to do the daily thing of trading. That's okay. Do swing trading. Do investing. Do what fits you. All right. Good trading practice number 4. Eliminate any notion that profits equal good trading. Profits do not equal good trading. Guys, that is the biggest lie in the market. If you make money, you think you're right and you think it was a good trade. It may not be a good trade. All right, guys, a good trade is following your strategy and managing risk. If you lose but followed your strategy, that was a good trade. All right, guys, this is hard for people to understand, especially beginners. But if you stick to your strategy, step by step, you follow it verbatim, but then you lose money, guess what? That was a good trade because you followed your system. If you're following a system or a strategy that has over the long run produced great returns, then if you stick with it over the long run, you will do well. Now, again, when you start to deviate from that strategy, when you start to change things and stuff like that, you are decreasing your chance of profitability. And you are thinking that you are a good trader when you make money. When you don't follow your rules and you make money, you're going to think that you're a genius. You're going to think that you're using the right strategy, and you're going to start using it, and you're going to fail. So make sure you find a strategy that fits you. The strategy can be applied, and that you stick to it, and you only trade that. All right. Good trading practice number 5. Concentrate your portfolio. What does this mean? Trade in markets that suit your strategy and risk. Low risk, maybe trade bonds or slow moving stocks. All right, guys, as we discussed, your strategy should be based around you. That should also be the same with the stocks you trade. Me, as a relatively safe investor and trader, you're never ever going to see me trade Tesla. You're never ever going to see me trade Riot, NIO, penny stocks, anything that moves super fast, more than 7% in a day. Yeah, those stocks aren't for me because I can't handle that risk. When I try to trade stocks like that, my anxiety, my emotions go through the roof. Then I don't make smart decisions. Then my losses come in, and that's what happens. And so that may happen for someone like me who's a conservative playing with high risk stocks. Now, it can work in reverse too. If you're someone who loves risk, if you love the momentum, you love the movement, but you're sticking with a stock that hardly ever moves, that's going to get on your nerves, and that's going to lead you to making rash decisions. So guys, make sure you're sticking to markets that fit you, stocks that move the way you want them to move. Good trading practice number 6, make your own trading decisions. Guys, I don't know how many times we have to say this. I don't know how many legal disclaimers out there in the world. Make your own decision. I can give you all the education in the world. I can help you make the best decision. But at the end of the day, you need to make your own decision, because a simple decision made by you is better than following any tips, any advice, anything, because you know why you bought, and that will help you weather the storm and have confidence. Guys, if you're just following people's alert systems, if you're just following things and you don't know why, then when it goes against you, it's going to suck, because you're going to be like, dang, I just lost money. This sucks. They're stupid. Blah, 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 blah. You're playing a blame game. When in reality, you never did the research. You never understood why that may or may not have been a good trade. And guys, that's what I advocate for everyone. Make your own decisions. Do I put out alerts? Yes, but I always make sure to include, do your own research. Understand why. This may be for me. It may not be for you. Do your own research. Good trading practice number 7, let your winners run and cut your losses short. Buy low, sell high. As we discussed in the last Friday's live, where we went over the statistics that we found from over 500 stocks doing research on the Impeccable Stock software, we know that in 3 days, you should know if the trade is going to work out in your favor or not. And so based on that, we can kind of use that to determine this. Let winners run and cut losers short. Let me give you a perfect example. This week on the $1,000 challenge that I'm doing on YouTube, I placed 4 different trades. All right, guys, on average, I made about $20 a trade. Now, what would have happened if I had the potential to make $20 on each trade, but then lose $100 on each trade? What would have happened? If I would have had 1 loss and the rest of the 3 would have been winners, I would have still lost money. All right, this is what happened. I got 3 of the 4 right, so I had a 75% accuracy rating. So on the 3, I made roughly $20 each, right? So let's say I made $60 total on the 3. Now on the 1, I set up a lit to only lose 20. And since I only lost 20, guess what? I now made a positive $40 because I learned how to manage risk. So make sure you're letting your winners run and make money, but you're also cutting your losses short. This means you cannot marry a stock. You cannot believe a stock is awesome. If you want to do this, you need to make sure to understand where your stop loss will be and make sure to set it. Because if you marry a stock, if you want to hold it forever, then you're not going to be able to cut your losses short. All right, good trading practice number 8. Know where you are going to get out of a trade before you buy. Guys, I don't know how many times I have to say this. I do this on Instagram all the time. People said, Austin, I'm in this trade. I don't know what to do. I'm down $500. Like, My response to anybody, whether they ask me, where should I sell for profit? Where should I sell for a loss? Where should I buy? First ever question, what is your plan? You should always have a plan. I know it's cliche. We say this a lot. Plan your trade your plan. Yes, plan your trade your plan. So I got confused in my head for a bit. But yeah, guys, that's so true. You need to know why. If you don't have a detailed system, I'm going to buy here. I'm going to sell for a profit here. I'm going to sell for a loss here. If you don't have those 3 areas defined, written down, you don't know them, then when you get to an unknown situation, you won't know what to do. And when you don't know what decision to make, when you haven't already planned it out, you're going to make the wrong decision. You're going to end up compromising. You're going to end up selling lower. You're going to end up buying more, whatever it is. If you haven't planned for it, you're gonna make a bad decision. All right, guys. Good trading practice number 9. I think this is the last one. If it ain't broke, don't Fix it. Guys, how many of y'all have heard this? It's so true. Stop jumping from strategy to strategy to strategy to strategy, because each strategy has a hot period and has an off period. Some strategies perform well during bull markets. Some perform well during bear markets, but in reverse, it's not going to do well in the other one. So if you keep jumping from strategy to strategy to strategy, let's say there's one strategy you're on, it just lost you money. So you're like, oh, this strategy sucks. And so you move to this other strategy and you start using this one, and then it loses you money. When in reality, if you would have stuck to this one, you would have made all the money back from your losses and more, because it was just the timing of it. Stick to a strategy that works, and if it ain't broke, don't fix it. All right, guys, that is the first setup of the rules for investing and trading. Now, sorry, well, what's happening with me? Anyways, the golden rules of investing your own money, right? The golden rule number 1, ask yourself whether the returns you are considering are repeatable. All right, guys, every strategy you should follow should be back tested, should have a history of returns for. And again, if you don't have it, either do your own research or Google it. Trust me, you can find returns of anything, basically every strategy anywhere. And if you need help with that and you're actually trying to test the strategy, let me know. I'd love to help you do the research. I love doing strategy tests. But basically, you want to be following a system, a strategy, a plan that has, on average, repeated great returns, and you want to know what those returns are. You want to know what returns they do in bear markets, what returns they do in bull markets, and what you can expect. And that's what you need to know. Is the return I can expect the one I want? Golden rule number 2, there's risk with every investment. If you haven't figured out the potential risk with your investment, then you haven't looked hard enough. There's peace that comes around knowing your worst case scenario. Guys, you're going to lose money. Welcome to the stock market. It happens to everyone. It happens to me, right? I did 4 trades. I lost 1. I always lose. You always lose. You will always lose in the market. It's how it works. And you just have to be really right on your winners and cut your losses short, as we discussed previously. But understand, there is a risk with every investment. And so you need to understand, what is my potential risk going into this play? That's why on the Impeccable Stock software, you can type in, I only want to risk $500. And it says, okay, if you only want to risk $500, this is how much you should put into the trade. This is where your stop loss should be, et cetera, et cetera, et cetera, because it helps you do that. And when you know your worst case scenario, when you know the amount that you can lose, it kind of gives some peace. You're like, okay, it's fine. I can only lose this much. We are set up. It's okay. And so when you have that, peace kind of comes around knowing your worst case scenario. Golden rule number 3, if your strategy guidelines aren't met, move on, right? I don't know. I'm going to compare this to life because I'm in this stage of life, and so I can do this. But when you're looking for a significant other, you typically have a checklist. I want them to have the same values as me. I want them to be okay with my family. I want them to be okay with my pursuit of financial freedom, right? You have all these deals. And if your significant other or someone you're looking for doesn't match those, then guess what? You're going to move on. Right? Let's do the same thing. You're looking for a car. You want a Suburban. You prefer purple. You want it below 100,000 miles. Okay? You find a blue Camaro above 200,000 miles. You're immediately going to write it off and move on, right? Because it doesn't fit the guidelines. It doesn't fit your strategy. And so that's the same way we should be looking at stocks. There are a lot of people who go, this stock does not match my strategy, but I heard it being talked about on the news, on StockTwits, on Twitter. My friend just bought it and he's up 1,000%. Like, duh, I should buy it. And that's called FOMO, the fear of missing out. You should have JOMO, the joy of missing out, because you're sticking to your strategy. So guys, remember, if your strategy guidelines aren't met, move on. That's my mic. My mic should say here, not move on. There are thousands of available stocks, and they are moving every day. Don't chase, wait, be patient, and make good quality trades. Crucial statistics behind trend following. I really loved this part of the book. It's really great, and it kind of brings some light into things that we do here, since we're mainly trend followers. So again, this is a little picture from the book, is a study of market direction. So the study that was done from 1964 to 1999 showed this. And again, 1999 is going to be a bit because now we have that. Anyways, statistics aside, primarily in a bull market with a couple crashes here and there, what we can see here is that throughout that period of time, we were in an upwards direction, moving higher 28.1% of the time. We are in a down direction, moving down 7.7% of the time. And we were sideways and basically neutral 64.2% of the time. What does this mean? How do we interpret this charts? Very simple. if you are following a trend following strategy, you're going to make money during up direction. You're going to make money during down direction. And that makes up only about 35% of the time. Can I do math? 35% of the time in the market, less than half, will be making money. The other half will be staying out of the market or being sideways. And so there's a lot you can learn from that. And if you actually watch my retirement portfolio strategy video, you'll actually learn that I use a covered call strategy with the trend following approach so that I make money in an upwards direction, I make money in a down direction, and I make income during a sideways direction using a covered call strategy. And so that's the best way to do it in my opinion. But again, I'm biased. But still, if you want to check out that strategy and learn exactly how it works, definitely go check out that video on YouTube. Okay, that is that. This study, which is awesome, it compared trend following to investing. Like, why should we be following the trend? And I really wanted to show this because it shows the importance of people who hate risk, right? So for those who go like, oh, you can't time the market, like it's not going to work out in your favor. And they quote things like, you know, if you don't, but like if you weren't in the market during the best days and you'd only have a 0 or like a 1% return year over year, whatever. Anyways, look at these. All right. So guys, you can see here, this is, best case, rebalancing, extreme volume, standard deviation, breakdowns, regardless. What I want to show you is overall, all the returns were the exact same. Isn't that crazy? How all the returns were the exact same? Like, it's basically identical. A trend following strategy versus buy and holding, like 17.42, 17.83. Crazy. And so again, that's kind of how it works. And again, you can review the best months. But one of the coolest things to see is the worst months. So again, when you're kind of using like a trend following approach, you have less worse months. As you can see here, we kind of have a -8 and a -7 versus the -9. It takes less time to get out of bear markets and other things like that, but great stuff. And here's an example of the trend following approach that we use on the Impeccable Stock software. So what you can see here is when it breaks above the band, it's a great time to buy. When it's in here, the market is neutral. When it's below, the market is bearish. And so that's the way that we view the market. We make money on the way down here. We make money on the way up here. We make money in covered calls here. It's a very great setup, very easy to follow. So again, guys, that is kind of the approach. And again, for those who are tuning into the live stream a bit late, just a note from our sponsors, we are sponsored by the Impeccable Stock software, one of the fastest, most reliable ways to do research and finding amazing swing trades and investments. Start your 14-day free trial using the first link below. Because of them, we're able to have all these statistics and do a lot of this research and have this platform. So thank you to the Impeccable Stock software. It's amazing. I recommend it. So guys, thank you so much for tuning in. We have a lot going on, but this is Q&A time for those who want to tune in. Looks like we don't have many live viewers this week. We had about 350 last week, but we don't have many this week. So Q&A time is going to be a bit bland. I'm still going to talk a bit here for about a minute to give people who do want to ask questions a chance to ask questions. But again, guys, thank you so much for watching this video. It really is just a cool way to have some interaction with you guys, because I know that you guys love talking when we can, and since I'm super busy, I love just dedicating a good 30 minutes to an hour of my time to talking to you guys. And so I do this every single Friday at 3 p.m. Central Standard Time. So I hope to see you next Friday if you're watching on a replay. And if you're here watching live, thank you so much. It means the world. All right, guys. I will see you next Friday. Thank you so much for watching. And if you want to watch the replay, feel free to do it. It'll be up in about an hour.